The Federal Reserve's recently concluded Jackson Hole Economic Policy Symposium does not bode well for the global economy. The 2014 conclave of the world's top central bankers and their privileged economist cohorts in picturesque Jackson Hole, Wyoming, took place August 21st through the 23rd. European Central Bank ECB chief Mario Draghi provided the big news, with a speech that indicated the ECB will be adopting the Fed's policies of the past several years, principally quantitative easing, QE, a Fed phrase for currency debasement, or simply counterfeiting by computer entry. Under former Federal Reserve Chairman Ben Bernanke and his successor Janet Yellen, the Fed has magically conjured up more than $4.4 trillion out of thin air and shoveled much of that into the palms of their fellow bankers. The ECB should now be expected to copy the Fed's bond buying binge and go on a huge bond buying spree of its own, creating trillions of new euros. This was really not news, however, since Draghi and the ECB had already embarked on their QE counterfeiting gambit at least as far back as the beginning of June, with their revolutionary step of cutting bank deposit interest rates to below zero, meaning a negative interest rate. The Frankfurt-based ECB announced they were reducing the deposit rate to a negative 0.1%. forcing banks to pay a charge if they continued to park money for safekeeping at the ECB. But that was only the opening round, presaging much larger actions to come, as Draghi made clear at the time. Quote, "Are we finished? The answer is no," end quote, said Draghi. Quote, "If required, we will act swiftly with further monetary policy easing. The Governing Council is unanimous in its commitment to using unconventional instruments," end quote. Ah yes, unconventional instruments. Another Fed phrase meaning we'll invent new programs and usurp new powers to do whatever we please. That announcement by Draghi back in June was a public signal that the ECB was on track to follow in the Federal Reserve's tracks, which is precisely what Ben Bernanke had urged it to do in 2012, as the New American's Alex Newman reported in this article entitled, "Europe Must Further Centralize Fiscal Power, Claims Fed Boss Bernanke." That was back in August of 2012. The ECB's rate cuts in June caused tremors throughout the EU, especially in Germany, where Draghi's ultra-loose monetary policy and usurpation of powers were denounced as autocratic and dictatorial. George Fahrenschon, the head of the German Association of Savings Banks, accused the ECB of raiding the savings of the thrifty. Fahrenschon said, quote, "We are tearing a hole in the pensions of savers. Over time, these low rates will destroy the value of assets," end quote. Savers will be penalized again, while the politically connected insider bankers will walk away with more hoards of expropriated cash. David Owen from Jefferies Fixed Income pointed out that banks will be able to borrow 400 billion euros for 4 years at near zero rates. They will be able to tap the ECB for funds equal to 7% of their private loan book without using up collateral. Quote, "They can get free money for 4 years," end quote, Owen said. But that, as we have noted, was just the start. When the ECB's new outright monetary transactions, OMT program gets rolling, the bank will be buying unlimited quantities of government bonds. And that will create an avalanche of unbacked currency, with inflation following in its wake. In a thoughtful article on the Jackson Hole meeting in Forbes magazine, Steve Forbes offered sound free market critiques of many of the Fed's actions. Unfortunately, his solution is legislation to create, quote, "a commission to examine thoroughly and dispassionately the whole area of monetary policy and to make recommendations of where we should go from here," end quote. What we do not need is another commission study of the Fed. What we do need is an honest audit of the Fed, something Representative Ron Paul very nearly succeeded in obtaining in 2010, before the Fed's Wall Street cronies squashed it in the Senate. A genuine audit of the Fed would reveal the theft of trillions of dollars, which would stir the public outrage needed to abolish the Fed. No individuals or institution should have the unchecked powers exercised by the Federal Reserve.